There we go. Yeah, seriously. Everyone say hi. Hello, Vern, John, Jeffrey, Jim, Stephen, Mike. Hello. Hello, Ed. Hey, Tex. How you doing there? Hey, William. Hey, Rick. Joe. Thanks for being here, everybody. I really do appreciate it, okay? Seriously. Really, really do. All right. So today, I'm going to talk about positioning sizing. I'm going to talk about stop loss placement. I'm going to talk about portfolio diversification. And that's going to be very short-lived for me, but that's okay. I've got some things to show you. We'll cover that. I highly, highly welcome any questions you like, about anything you want, even how to make pie if you want, So please ask questions. That's one of the secrets to a trader that's struggling, or a trader that maybe just started. That is truly one of the secrets to success, is to ask questions. Before we get started here, I want to put this up here because I just want to remind everybody. I know that we've already had, between Right Way Options, Hit and Run, and BYOB, members have taken advantage of this. And I want to throw this out there to you, that our Black Friday, now this is, forget what's on the bottom here. That's for me, Hit and Run Candlesticks. We're all three a little bit different, so don't pay attention to this if you're looking at Right Way or BYOB. But if you are looking for maybe to upgrade, a better buy, something like that, the Black Friday sale just might be for you. So if you're interested in Right Way Options, you need to check what Right Way Options is offering. And if you don't know what it is, ask Doug in the room, and ditto for John, okay? And ditto for me in the room. But just remember, and this shuts down on Friday after the market, it will shut down. So anyway, I wanted to throw that out there, okay? So like I said, today we're going to talk about, position sizing, stop loss placement, portfolio diversification. Here's something else we're also going to talk about, and we're talking about how I trade the Road to Wealth account with the success that I've had, and I've had some pretty good success. I know a lot of people here have had great success, and thanks for sharing that with everybody. Having success in the stock market is not a big deal. I mean, I guess it is if you don't have it and then you get it. That is a big deal. But a lot of people do it, and that's what I'm trying to point out. A lot of people make it in the stock market, and there are some that don't. That is true. But I'm going to cover things. And what this is I'm in the process of creating a blueprint to Road to Wealth trading. And this is one of these little things that I have, and I'm going to get into it just a tiny bit, very tiny. And then we'll, answer questions, look at charts, whatever you would like to do. All righty? So what am I going to start with? Oh, yeah. I'm going to get rid of this. Well, I can keep that up there. So let me click on this button here. Wow, that works cool, Ed. Thank you very much for your help on this. Appreciate it. All right, so let's talk about that. I'm already a member. There we go. A second. There we go. There I am. So let's talk about positioning sizing. And you guys, I think most of you know that, man, I toot my own horn, okay? I beat my own drum. I'm not a follower, okay? I'm not going to say that I'm a leader or anything, but what I do is my own trading. I do my own thing. I don't follow the rules that you might find on the internet. I could put my rules on the internet, and then guess what? You'd find my rules on the internet. It's not that the internet is not anything magical. It's not that any one person has the corner on the best rules or anything. That is something I learned long ago, because I tried to follow. Well, this guy does this guy does that, this guy does the other thing, stick with that. Well, you know what? Not everything works for everybody. Not everybody likes oatmeal raisin cookies. I don't understand why, but you know, a lot of people don't, and that's okay. That's all right. So you really have to find what works for you, and so it becomes you don't know what questions to ask, and that's why I know that John, I know that Doug, and I know that we beg people to ask questions in the room. Don't sit there on your hind end thinking that, you know, magic is going to just poof, just pop into you. It doesn't work that way, all right? So anyway, let's get started here. So for positioning sizing, let me do this. And by the way, anybody can go to this page. I'm going to put this link out here. This is not any secret page. There's no charge for it. There's no, you know, you don't have to give up your firstborn for it or anything. But you can go to this page, and I use this page a lot, okay? I go on this page a lot. And I do that because I have to remind myself of what my rules are and how to stay between the bumpers, you know. Don't go off of the edge. Stay between the bumpers. So let's talk about positioning sizing. Well, one, personally, it's real simple. You have to know how much money you have. And I'm going to put up here the Road to Wealth account. By the way, the Road to Wealth account has tripled. I'm on my way to quadruple it. And I have till the end of January to get that done because that's when the year is up. And our goal was only to double it. So we're doing pretty good, and I'm well on the way. Actually, I could change that 15.5. Is that right? That is correct. So to double the account, I'm gonna skip over this top part. I'm gonna go down to this bottom part because this is how much I allot for my position. So for position sizing. So this number here is extremely tricky. All right, this is a tricky number because it's all left up to you, period. Now, I could tell you that the industry standard is 2 to 3%. Well, you go ahead and do that. You knock yourself dead and you do that, and it might work for you. It just might. And I'm going to tell you right now that I probably crush the industry standard. People look at me and say, are you out of your ever-loving mind? Well, maybe I am. Maybe I am. But this is where you've got to decide, are you a good trader or are you not? Are you a good trader? Somebody yell out, yes, I'm a good trader. Who's a good trader? Somebody share with me in the room. Do you think you're a good trader? Don't be bashful, okay? John, my favorite trout fly is a mosquito or a royal coachman, but they don't work down here in Missouri. Emma says average. Emma, I'll argue with you on that one. I think you are. Jeffrey says, Nancy says, yep, and I agree. Who thinks they're a poor trader? Anybody? And it's okay if you are. Got to remember here, nobody here knows you. All right? Okay, so there's no poor traders in here, or there's only 3 people in the room. So I don't know, which is it? We'll see. So I happen to think that I'm a very good trader. There you go. Trader trick. You're improving trader? Good. Jeffrey, before I joined here, I was seeing without believing. Today I believe. That's good, Jeffrey. Thank you very much. We'll have a check for you in the mail for saying that. Okay, so kind. Nancy says, I have moments of being a not so good trader. I have those too. Not so good. But it's quick moments, right? And we get over it. Okay, so let's get back to this. I happen to think I'm a good trader. So I could come in here and I could use 3% and I could put $465 per position. Okay, that's my sizing. That's how I figure sizing. Industry standard is 2 to 3%. And I could, put $465. Well, for somebody starting out, I think that's a really great number. For somebody that's struggling, I also think that's a really great number. Keep your risk small, okay, till you learn how to be a better trader. As you become a better trader, move that number up a little bit. maybe to a 5%. Now, remember, I'm using 15.5 here, okay? And this is the Road to Wealth account. So now you can spend $767, $75 as you become a better trader. How do you know if you're a better trader? You're making more money. It's real simple. Your account's growing. Okay, you can put any other kind of BS in there on what makes you a better trader, but bottom line is, are you making money? That's all. That's it. It's the only answer, okay? Not, well, I'm doing better at my win-loss ratio, but I am not making any money. Well, you're not any better of a trader then, okay? I'm sorry, but you're not. When you are a better trader, then move this up to 7 maybe. And notice how now we can put 1,085 in our per position. And then it just goes on and on and on. You become a better trader, you put 9 in there, all right? Become a better trader, put 11% in there, up until maybe some point where you figure, wow, that's a lot of money. I just simply don't want to do that, even though I'm a really, really good trader, okay? I can tell you right now that I usually use something between, say, I don't know, 12% to 15. I've even gone, whoops, not that much. 1.5. There we go. 15%. I've even used 16%. Sometimes it just depends what the market is doing. So that's the kind of numbers I'm using for my positions, okay? Now, when I buy, 99% of the time I buy options, strictly directional, simple calls, simple puts. However, I am in 2 stock trades right now. So I only buy maybe a couple or 3, maybe, of what am I trying to say? Of options, okay? So you can see what I put in, and now I like, total. And if I can buy, what I'm trying to say is if I can buy two positions with that price, great. If I can buy 3 positions, that's great. And I come very close to that. Sometimes you bump over it because you just can't control the exact size of it, all right? So that is really how I do positioning sizing. I know there's all kinds of mathematical ways you go in there and to me that's insane, okay? But you do what is best for you. I'm just sharing you what I do with the Road to Wealth account, okay? Let's move this out of the way now. And stop loss placement. Stop loss is, to me, that's one of those questions I get asked by a lot of people, and it's one of those things that I think most people make too much of a big deal over. I really do think so. Just way too much of a big deal. And here's why. I'm gonna look at Meta TA. I'm gonna look at Meta here. Yeah, actually, that's probably not a good one to look at. How about ONDS? This is one that I'm in, ONDS. So, and the first thing about a stop loss, to me, it's got nothing to do with, say, these lows in the beginning, all right, in the beginning. It doesn't have anything to do with these lows or that low or anything. What it has to do with is how much can you afford? Ask yourself that question, because if you go to some class where somebody says, use that pivot low for a stop, and you just bought this stock and it starts failing and you hold it all the way down here, well, you're out 17%. I got news for you. Your rear end's going to pucker up so tight and you're going to think that guy is a buffoon. And he will be a buffoon, or she. You can't afford that. So ask yourself, first question, how much can I afford to lose? Okay, real simple. Now you can start working on a stop. And, there's no rule, there's no law. No one is going to go to jail. You are the only person you have to answer to. So you could put a stop at the low of that candle right there if you want. In a choppy market, you might get stopped out a lot. That is true. That is very true. You might come down here and put a stop, I don't know, for the sake of conversation, at this green bar right here. Okay, you can do that if you can afford it. Something I like to do actually is I use a 3-bar chart a lot for a stop. I'll look at that 3-bar chart, and that just breaks the one candle. It takes one daily candle, breaks it into 3 candles, and I think it just really shows a nice area for a stop. I just do. I could spend some more time on that. Right now, at this second is not the time to do that. But another thing that I want to bring up is what would tell you you don't like this chart. And this is something I say to a lot of people. Tell me why you like this chart. Why do you like this chart? Well, once you establish why you like it, you have now created your stop without knowing it. Because if you know why you like it, then you should know where you wouldn't like it, right? And where wouldn't you like it? Well, if you bought it here and say tomorrow it opened up here and it closed like that, I mean, seriously, are you going to keep a chart that has a bearish engulf in it? Probably not. I mean, I might know people that say, well, my stop is down here, and they're going to let it just keep on coming down. Now, I don't agree with that. In fact, I find that insanely ridiculous, because probably the number one reason most people don't make money in the market is they're not controlling their losses. To me, that's the number one reason. I do a lot of coaching, and lately I've been doing a ton of coaching. And lately I have to apologize to a lot of people. I am so behind on coaching that it's just crazy. If that chart is looking like that, why keep it? Get out of it. Something I used to ask a long time ago, and I don't know why I don't ask it anymore. We're going to ask it here. When is a $100 loss good? When is it? Well, I'll tell you when. When you finally take the $500 loss, believe me, that $100 loss, you'll look back and you'll think, that would have been the best trade of my day today. I don't care how much money you made trading Pfizer or anything, okay? Right there would have been the best trade of your day. So when that thing starts to get ugly, get out of it. Now, let me stop for a second. I'm a short-term swing trader. I'm all about trades like, take U. I'm in U. But I bought it today, and I also closed half of it out, I think for 20% today already. So I'm a very short-term swing trader. My target area, which we're going to talk about this a little bit more, but my target area right now is up there. My target area is not way up here at $30. I'm not looking to marry this stock. In fact, I don't usually marry any stocks. I already have a wife. I'm already trained for her. I don't want to be trained again. I don't need to do that. So, I date these stocks. That's what I do. I rent them. And if I can buy a chart here and sell it into strength on the way up, then good for me. So I kind of, sometimes I lose my track and I'm not sure how I got here on this. But anyway, how did I get there from a stop? Good grief. So take this start. If it started to fail, am I going to keep it? If it started to do this here, where am I? There I am. If we started to put in a bearish engulf tomorrow, am I going to keep it because my original plan was for it to move up here. How can I possibly be wrong? That's impossible. I know 6 other people that bought UUU. I heard on television last night that UUU was hot to trot and this thing could go to $180. How can I be wrong? Newsflash, it might go to $180, but it can also go to $9 before it goes to $180. So take those losses. It is the number one reason traders lose money. It truly is my belief. Truly is. Okay. All right. Portfolio diversification. Baloney. Baloney. That's my answer to it. I'm a short-term swing trader. If you are a short-term swing trader, why do we need diversification? Should you be in an industrial, a biotech, computer, household, software, industrial, computer? Do you need to be in all of these? If one of these, you are a short-term swing trader. So what does diversification have to do with the price of tea in China? Seriously, I know traders. I coached one a couple of days ago that they're a short-term swing trader, very short-term in fact, and they were trying to do this diversification because they read it in a book. And they were spending all this time getting their portfolio all set up where they had a little this, a little that, and a little the other thing, and they traded like shit. All right? Stop spending your time on stuff that don't matter. It just don't matter, period. So if you're a short-term swing trader, that's what I do. That's all I teach. No more, no less. And so think about what you're doing and realize that there's what do you need to wear a helmet if you're maybe you do. Do you need to wear a helmet, motorcycle helmet, if you're trading? No. Well, then don't go out and shop for a helmet. Don't spend hours getting the right size for a helmet. Don't spend the time. Don't waste your energy unless you really think you need a helmet. That actually might be kind of funny one day. Might need a helmet. I might do that. Okay. Now, let's talk about this. All right. I have talked about positioning sizing. It's very, very simple. I gave you a link to a tool. It's 100% free to you. You don't have to sign up for anything. You don't have to give your name. Nothing. We talked about stop loss placement. Number 1, how much can you afford? Number 2, tell us why you like the chart, and that will tell you why you don't like the chart. If it started going, let me do that one more time too. Say this UUU. Why do I like the chart? Well, and we're going to talk more about this because we're going to look at this blueprint to the road to wealth. I like the chart because it came from this bottom. It moved up over the T line here. It gave me a 3-8 trap, gave me a 3-8 trap breakout, and it's working. So where would I not like it? If it came back below the T line, right? Yeah, the answer is yes on that, by the way. The reason you like it is it's above the 8 EMA, right? So if it goes below the 8 EMA, would you not like it? All right, so let's do this. And I recommend everybody do this. There's free programs all over the place. Get programs where you can draw on your board here. So where would I not like it? Well, let's go see. Oh, I wouldn't like it below that line right there, would I? I don't think I would like it if it did something like that. Answer where you wouldn't like it, and that is where your stop is. That's how simple it is. So simple. Let's see, Coach, why do we keep talking about my stock going? We are not talking. That's a good one, Coach. We are not talking about your stop going down. We're talking about your stock going up in a minute. We'll do that. And portfolio I can't say the word. Deserve. Yeah. Why do you need to do that if you're a short-term swing trader? Why spend time doing all that? No need. Okay? All right. Now, some people think I'm full of crap, but I may be. But if you stick with me, if you roll with me, I'm going to turn my Road to Wealth account into about $500,000. Now, it's not going to happen overnight, and it might take 3 to 5 years. But if you're no longer a member here tomorrow, you come check in 3 to 4 or 5 years from now, and let's see what that count is. Because I'm on a mission, and that mission is going to do it. So it's following these simple rules and keeping trading extremely simple. All right, now let's talk about this, okay? As I said, that's all done. So the member e-learning, the actual topic is over. I'm not going to dwell on it because you just repeat stuff over and over and over, and no one asks questions, so no one must be interested in it. And that's okay. So now let's talk about this project I'm doing, and I'm putting together a blueprint for the Road to Wealth account. And this is some highlights that I'm looking at. And I talk about this all the time in the room. Nothing, I like that. You guys can't see that. That's cool. I like that text. You have to send me that and I'll share it. Is the market on your side? You hear me say that all the time. And I will say that over this week, I have seen members of Hit and Run Candlestick take on short trades, and I'll be honest, I roll my eyes. And I'm sorry if you've done that and you feel offended right now. But I just do not understand. Let me move this out of the way for a second and go to the SPY here. There we go. I'll bring that back down now. I do not understand why somebody would put a short chart on when we have such a bullish market. I cannot, for the life of me, understand that. I can't make any sense of that. But there are people that are just born shorters. That's all there is. They think there's more money in shorting. I'm not going to disagree with that necessarily, but not when the market is bullish. So make sure the market is on your side. If the market is bullish, you trade long. If the market is bearish, you trade short. I will say that if the market is short, there is opportunity to trade long, even in a short market, but you want to be predominantly short. When the market is bullish, there is zero room to be shorting. Zero room to be shorting. So trade with the market. Number one. Number two, trade a simple trend. All right, let's talk about a simple trend. Now, everybody here knows, I think you know, if you don't know, you will now, that my trend is very simple. Right here. Very, 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 very simple. I'm going to follow what price does. I'm going to follow what that I'm going to follow what that white line does. And I'm going to follow what those green dots or red dots if we're in a downtrend. And that's my trend, period. I don't look at anything else. This chart can be underwater like this down here. We're definitely bearish, right? And then right in here, you see how that trend changed? Price, 8 EMA, trend indicator. That trend is now bullish to me, period. When we get over the 50-period moving average, that's a bonus bullish trend. If we get over both the 50 and the 20 or 200, that's even more of a bonus bullish trend. I don't overcomplicate it. It's not hard. Again, I'm a short-term swing trader. That's it. I'm looking for trades. And don't think that short-term swing trading, you're looking for 5-10%. I'm currently long on METU 72% on one account, 17% on another account. I'm currently long on UUU that I bought this morning that I've sold half of it at 20%, currently up 40% on that. So as you can see, you don't have to, it doesn't mean you're taking 5% profits, okay? Now, a lot of people think that. No, that's not true at all. So, positions, let's look at length of positions, days, times. Where are we here? How long have I been holding this? I know it's somewhere on here. I do know somewhere. Oh, days open. There we go. 17 days in UPS, 16 days in PFE, 22 days in CNC, 10 days in TSLL. So it's not like I'm in and out, not a day trader. I don't hold 1 day, 2 days, and then close. I trade for profit. It's got nothing to do with how many days you hold. I get people, they don't ask me anymore too much, but some people used to ask, well, how many days do you hold a stock? What's that got to do with the price of tea in China? Well, seriously, what in the world would that have to do with anything? How many days you hold? Because what dictates is, have you reached your target? What's price action telling you? If you're long something and the market just tanked, are you going to stay with that chart? You can't put days on that. You can't do that at all. So, follow the market, okay? And follow the simple trend. And you can make your own simple trend up. There's no rule book on this part of it. I follow price, the T-line or 8 EMA, and the trend indicator. And I want them, when they're bullish, I want them all stacked up just like that, okay? All stacked up. A simple entry. I have to tell you, of all my years of trading, the most simplest entry truly is the 3-8 trap. It truly, truly is. And a 3-8 trap breakout. I trade a 3-8 trap breakout an awful lot. 3-8 trap breakout. I think it's still a buy. Now, I know traders that won't buy that because it's too high. Okay, knock yourself dead. You're going to miss out on that extra money up there. That's my feeling. You can ask anyone in the trading room. I don't shop for super duper price. I want charts that's working. I don't want to be the worker bee that pulls it up off the bottom. I want to get in while it's already off the bottom. I want to climb on that hot air balloon while it's off the ground. I want to climb the ladder up to it. I don't want to get in that hot air balloon and have them still hooking up propane tanks. I don't want to do that. I want the champagne. I want all the munchies already in there. I want that thing hovering, and then I'm going to get in it. So, simple entries. I've got some charts down here. Take a look at HIMS. HIMS. Why is that not doing it? Oh, hold on here. There we go. Look at HIMS. I want to stop right here for a second. This is a chart pattern that we've been following a lot here in Hit and Run Candlesticks because of a couple reasons. One, it's basically a modified pinball setup, and the pinball setup is the setup that I created years ago, and it is the setup that I was able to quit my job and trade for a living. It was this setup. And the reason it was this setup is because it was the first setup where I consistently made money. And it consistently made sense to me. So what it is we want price down. See how we're down. Look how the trend indicator is all red. And notice how the white line, the 8 EMA, is below that red dots, right? And then see how we're starting to turn up. I realize that we're not above the green dots. I understand that. If you want that, then go over here to a faster time frame. And now, if that makes you feel better, and believe me, I look at that because it makes me feel better. So I'll look at that and say, okay, I can buy this now. Even though I trade predominantly from the daily chart, I will look at that 3-bar chart or even hourly to make sure my rules are in place because I want the 8 to be above the trend indicator. Doesn't have to be on the daily chart. Not in this case. This is a separate setup. But we do have that 3-8 trap, and we do have that 3-8 trap breakout here. So here's HIMS. This is one I'm thinking about buying before the close of today. And You can see that it's up, up, and away, and that's okay. That is truly, truly okay for me, for my style of trading, because what I'm looking for is my trade plan. So the next thing on this list is trade with a plan. So let me share with you what my trade plan would be on this chart, okay? This chart came up on my scan where I find these charts at. And I look at it and think, man, I really like this chart. Okay, let's set the plan up. Let's come over here and I do this because I want to know where that 50% retracement line is. Now, that's my sweet spot. That's my goal line. I would love for every chart to go there, but they don't do that. So I don't necessarily, I don't wait for the chart to get there necessarily. This line right here that you can see, dotted line, that is a target area. The blue line and red line here, 50 and 200, is a target area. And this is a target area also. But I'm not going to use this unless I was in early this morning, and then I might use it. But if I buy it now, I'll skip that one and go to this one. So here's this chart set up. And one of the most important things here, where's my pen? I think everybody already knows, right? The market is bullish. Yikes. So the SPY is my market. You can go look at IWM, Dow, whatever you want to look at. But the SPY is bullish. So the market is leading the way. So that tells me to be bullish, not bearish. And it also tells me that I think the market is in fairly good shape, fairly good shape to go higher. So I can enter a long trade. Another thing is, you guys all know that I use this down here, T2123, and lately, because a member asked me to help them with this, the T2128, and if you remind me before the end, I'll tell you how I use it, because it's probably not how you use it. As long as that's working, and VXX, it's still part of my plan down here. As long as it's down, then we're good to go long, okay? So let's take a look at HIMS now. So here's my chart. Here's my trade plan. I enter this trade. If it moved down this level here, I would be out of that trade. Let's trade this red. Make that red here, okay? There we go. And now I'm looking for the trade to move up, and I will take profits on the way up. Now, what am I going to do here? Well, let's come back over to our calculator where we figured out our position size. Now, if you look at this column here, that column right there, when I get to a point where I'm, more money than this, maybe I'm at $200. Well, I will take some off the table because all I need to do is net, we'll call it $74 a day, and I will double my account to $31,000 in a year, and that's my goal. All I have to do in a week is $269. If I closed my biggest winner right now, 72%, if I close METU, METU, Meta single stock ETF out, that would be $440. Well, I've made a whole week's worth of work out of one stock. That doesn't count the 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 green charts, which probably come to $1,000 that I could sell if I wanted to. And for a month, I only need $1,400 to meet my $31,000 goal if I did that every single month, to meet that goal in 2 years. So there it is right there. There's your answers, my answers. And you can plug in any number you want in here, by the way, any number you want. Okay, so, damn it. So this is part of my plan. This is my trade plan. Take profits into strength, close out positions when they meet my goals. And it's not that, if my daily goal is, if it makes $72, I'm not going to sell it at $72. But if it was to come up here to $140, could I might sell half of it? Yes, I absolutely might. You bet I might. And then let the other half work. Okay? So there's my plan. It's that simple. Maybe a couple things we missed over here. All right. Well, utilize a stop. We actually talked about that. Close a position out if it goes against you. Very simple. We just made a plan. I can't even begin to tell you how much I hated making a plan once upon a time. But every stock guru that I talked to, they wanted you to sit down and write out this 3 or 4 page garbage because they want everything detailed out. Nobody made a plan. I should say very few, but overall, nobody ever really made a plan and never used a plan because that was the thing back then. Maybe it's the thing now, but it doesn't have to be. I just shared with you a simple plan, and what more could you possibly need? Bull. B-U-L-L. I'm in bull. Is the market bullish? Yes, it is. Have I set up my grid lines? Yes, they have. Have I set up target areas? Yes, I have. Is it a 3/8 trap, 3/8 trap breakout? Yes, it is. Do we need more? I don't think so. Do we need any more than that? No, we don't. Core weave. Here's one I'm thinking about buying. Core weave. There we go. Here's one I'm thinking about buying into the close. It's run right up to the first target area. This area right in here, and let me point this out to you. What time is it? We have time. This area right here, the color, we'll make it yellow. And I'm going to start over here and go down. That's the construction area where this chart's turning around. And once we break out of that construction area, now we've got a nice little run to that next target, and then you've got space to run to that target up there. So this is very buyable, very, very buyable down here. Just keep track of it. When you break out, we could come back and test that, and then you've got a nice move on the way up. Number one thing, the market has to be working for you. The market has to be working for you, not against you, okay? Let's see, am I in IONQ? Oh, yeah, I am. IONQ. Whoops, try that again. IONQ, there we go. There it is, finally. I'm in IONQ currently, and that's up 25%. And, you know, everything is all done. We set that up. We're really getting close to my absolute goal line. That's my max trade, by the way. That line right there is my absolute max trade for this particular setup, this particular chart. And I'm saying that because that is a known area, and the 50 period moving average is a known area for price to consolidate and wobble around. And I don't want to be part of that. I have no interest in that. What I would rather do is trade in this case from below it up to it, and then get out of it. And then if it breaks out, now I can get in it again. Because I know, just like I know that the sun's going to go down tonight, I know it will consolidate here. Now, it may sneak up like this and then come down and consolidate. Might do that. And I want no part of this. I don't marry these stocks. I rent them. I borrow them. And I give them back. But in the meantime, I make money on the way up or on the way down for a short. So just keeping it real simple. Open, I'm going to go look at that. Open is one that I've been kind of thinking about buying, but see this one, let's take Open for instance. I can't buy it until it gets over this line here because we're too close to it. So why mess with it? Look, I know some people dig these kind of charts. I know you do, and it's okay. Every trader, you like what you like and don't like what you don't like. That's perfectly fine. Buy this with anticipation on breaking out and moving up, and you're gonna make. 11% more than I will, guaranteed. And that's all right. So for the traders that push this up for me, I owe you. Thank you very much. But that's not my cup of tea to buy right there. Stuffed underneath the 200 period moving average. And we need to come up and bump that. If this was to happen, I could see me buying it, I guess. Let's do there. If we were to come up and bump that and then pull back and start to see buyers, okay, I could buy that. I could be in that now. But we have to come up and bump it. See here, we bumped it here, but we lost it. That broke it. We need to bump it and stay right in that area. Okay. What else? I know there was one other. Oh, SMCI. I just saw it there. Oops. SMCI. Here's a chart that I'm thinking about buying before the close. SMCI. See how that's starting to work? So we're starting to lift up. Here's another thing. Hey, will that show up? Man, that shows up nice. Learn something new. So take these bottoms here and go up to this top right there. See that little top? And then see how we pulled back. A lot of these are a little more pronounced than this. But see how we moved back? And now see how we're moving up? So what we have here is a low, a high, a higher low, right? And now we're starting to move over the 8 EMA there. And that's what I'm looking at. And on top of that, the 3 EMA, the yellow line, is on top of that. And that's something else I'm looking for. You can see the 3-8 trap, 3-8 trap breakout. So now, here's my trade plan on this, okay? It's possible I adjust this one. We'll see. And if we have to, I'll show you what I mean. Right there. Let me look and see if I want this. Yeah. And I'll show you what I'm talking about here. Yeah. So my choice was going to be to take this top or this top here. Oh, I guess I should look at it. Oh. You know what? It's making me look a little harder on this one. But I am. I'm going to take this lower one. And I'll share with you why. What I want to do is I want those lines to match up to price. Now, keep in mind, what we did is we chose the top and the bottom, okay? And if you look at this line right here that I just put in there, look how price, we had trouble getting through it. We got through it. We bounced off of it. We went up. Look how we came down. You know, we hit it right here and then we moved down. So I think that's kind of an important line. Let's do this again. Let's just duplicate this. And let's go up to this next line right here. Okay. Now let's do this. Let's make this, let's make that pretty blue. Ooh, how did I get that light blue? Huh. No, I don't think this is going to show up real well. So we'll change the color. See how we stopped right there? See how we stopped right there? Look how we stopped right there. You see those two candles, and this is one of the main lines that I used with my eyes. See that? So I want that. See right here where we came down, touched and touched. So that makes me think that's a better area. Right there, and this is that line right there. So these are all targets on the way up, and then of course our big goal is right here. That would be the big one right in there. So I'm setting the chart up. So you see my trade plan. I don't put a line for a stop. I rarely do that. Sometimes I do, but not too often. Stop down here, but for this I will. Stop. And there's the trade plan. Bada bing, bada bomb. It doesn't take much, okay? I saw USAR pop up. I'm probably not going to buy that. I should have bought it earlier today. I'm not going to buy it. So here's what I'm going to do. It's a secret trading technique. I'm going to share it out here with everybody. I'm going to ask you not to share it with anybody, all right? So I'm going to share it with everybody out here, and that is the cross your finger technique. This is cross your finger technique. So what that is, let's do that one. So cross your finger technique. I'm going to cross my fingers that we have an inside day tomorrow, and that would be a buy. If you love this chart today, you should love it more tomorrow on an inside day. And that's the secret cross your finger technique, okay? Any questions? Anything at all? Oops, there may be some. Sorry. I think I got hung up here. I know. I love that. I'm going to keep that. All right. Okay, seriously, any questions? Anything at all? If there's not, I will let us all go. We're on that last hour of the day. Could be one of the most important hours of the day. Let's go take a look at the SPY real quick. I do want to thank everybody for hanging in there with all of us. I do appreciate that. Yeah, I do appreciate that. All righty. Thank you very much for everybody being here. I appreciate it. And we'll see you all next time, okay? Take care. Members, I'll see you in the room in about 5 minutes or less, okay? Take care.